So pretty much today, what are we going to be looking at is, of course, the economic calendar and the week ahead. What are we expecting it? But we are going to talk specifically about two dot points today. And one of them is the US CPI, that it's one of the most important. If you want to take RBNZ, Reserve Bank of New Zealand, the rate decision as the most important you can, it's completely understandable. But for the situation of the market right now, if we open NZD USD, we're seeing pretty decent moves on New Zealand dollar, but still, what is getting my attention is the Aussie dollar, right? Aussie dollar against US dollar. Look at the rally this thing is doing. It's just incredible. And this has a lot to do because of the inflation, okay, that we had a high inflation and the expectations that the central bank, the RBA, the Reserve Bank of Australia, would hike another 25 base points, but yeah, I mean, I can actually log in here into my terminal and show to you guys what's the sentiment for the RBA is. Let me just log in here, have it on my side. Anyway, so leave that for aside now. But as I was saying, yes, the market is doing pretty great on the Australian dollar. And another good trade that was Euro Aussie. If we search it up, Euro AUD, this one was a good short trade as well. Euro being very weak, Australian dollar being quite strong since June, 10th of June, so pretty much a month already. Australian dollar has been strong. So yeah, there's plenty of opportunities happening on the market right now, and definitely different ways of trading those opportunities. It's just going to depend on how you see yourself, more into scalping, more into swing trade, or what do you actually, feel like. And if you haven't heard about swing trading and scalping before, I've made a video on YouTube that you can search. Let me show you very quick. Swing trade, scalp, ACY. Okay, so if you search that, this is the video that you can definitely have a look on it. I'm going to send the link on the chat. You can have a look on this one. But I think enough to talk, and let's get to work, because we do have some things to cover today. If anyone, I see some new names here that I haven't seen before, so that's pretty good. Welcome everyone. Look, if you have any questions, if you have any doubts or anything, you can just message me on the chat. You don't need to message me directly, because maybe your question is someone else's question as well. So we get everyone to know the question, and I will read it loud, but everyone can read the question with me, and I will answer this follow-up. I do have few screens here, so at the time I look at that, I will be reading and answering it. Okay, so let's go for economic calendar first, and let's see what awaits us this week. I was looking at the economic calendar already, of course, yesterday. We do have some things going on. Yesterday we didn't have much. Okay, so we only had the German balance of trade for May, and it was positive. So that was a good impact on euro. Remember, as I always say, German holds the biggest GDP. Let's say, they are big producers, manufacturers especially, of electronics and components and so on. So they do hold a pretty decent amount of importancy on Eurozone. So always look up for German data that yes, they will be looking to move a little bit off the market. After that, we didn't have much. And then today, we had the consumer confidence for Australia at 10:30 a.m. And indeed, it came negative. Okay, so it was supposed to be negative 0.3% from the previous of 1.7 positive, and it came up as negative 1.1%. So that's definitely not good. So pretty much showing to us that the consumers here are not willing to spend their money. They don't think the money is worth what it's worth in Australia. And to be fair, it is true. I think not only myself, but including others as well, have been reducing spending. And if we look at consumer confidence coming negative, we may expect a decline on retail sales because therefore people are not willing to spend money because they look at it and think, okay, my $100 bill, it's not worth $100. It's worth maybe 70, maybe 75, $80. So therefore, we prefer to save this money and buy something bigger, maybe $1,000 that may be worth some close to 1,000. So let's say 800, 950, 900, around those numbers. And the rate, of course, we still with a restrictive territory here. The RBA have set the rates and not anytime soon looking to cut because now inflation came high. So lots of things. Anyway, so yes, I do believe that we won't be able to manage to have a good retail sales in the coming weeks. And then after that, we didn't have anything for the day. Moving on to Wednesday, today, we had, sorry, not today, tomorrow, we're going to have the Fed Chair, Jerome Powell, giving us a speech. And this is very, very important. Okay, I will note down here on my screen. So we have to talk about this. And this is one of the points that if you have watched already the video today, you know what I'm talking about. Otherwise, I'm going to note down here. First is Jerome. Let me take this off. When I do the webinar from home, my mouse is much better than this one. Jerome. Oh, there we go. You guys looking at my face is drawing these, right? I mean, come on, I'm not an artist. I'm an analyst, so don't expect much to get out of this. Okay. And then this is one of the things that I'm definitely looking forward to see. Guys, if you don't know, 80%, 75 to 80% of those speeches, those, anything that comes from the central bank, any new release announcement, they are free to watch. And I definitely highly recommend you to watch those speeches because there's a lot of information hiding on those bits and pieces that sometimes you miss it on the big media screen, on the big medias. And on there, you're watching the whole thing from the beginning to the end. So you're not missing any parts and you're taking notes. I actually, when I was starting to trade in a fundamental aspect, I was a little bit lost. So that goes a trick, a little secret. All right. So I keep a booklet. Sorry. I don't know if you guys can see it here on my camera. Let me check. So yeah, you guys can see. So I keep a book on my desk. I keep a lot of books actually. I have another one here full of notes. I have some papers from central bank. I got plenty of stuff here, and they help me a lot. Okay, so one of the tricks, I know a lot of you have been. To be honest, I know a lot of you have been knowing about fundamentals and knowing about macroeconomics because of us, because of ACY, since I joined here and started teaching everyone and trying to show you another perspective of the market. And I'm not saying that, fundamentals are the way they have to, they work 100% of the time. They're the best way to trade. I have the holding grail system. No, I don't. But it's much better than only drawing lines and trying to predict what's going to be the next move of the market. About drawing lines. Yeah, one of the guys just say, yeah, you're talking about me. Yeah, it's good. It's good to see that, I have built a solid people here that know they are on the right track to know why the markets are moving the way they are, and not only putting random lines and trying to pretend they understand what is happening from random lines and random chart patterns. Okay, it's not because you've put a trend line. Okay, now I know everything. No, come on. Anyways, so one of the tricks I would give to you is keep a book on your. I don't know if you trade from a office. You have a little office in your house. I don't know, but just have a little book. Doing trading journal. Trading journal is one of the things I've never done. I'm going to go against the media right now, is trading. I've never done a trading journal. Okay. What I've done is a bit different, and I think it's much more effective. Is okay. The central bank has hiked the rates. Australia's central bank has hiked the rates. In 1 hour, this is what happened with the market. In 2 hours, this is what happened. In 1 day, this is what happened. And in 1 week, this is what happened. So I usually used to note it down, everything. I don't do much these times anymore because I have so many things that I can't stop in. Okay, note it down what I need to do, how the market is reacting. And after a few years, it becomes so natural that you just don't think about it. You just do it. You just know what's going to be happening. And that's sort of the thing I want to push you guys into it, but okay, so as I was saying, so you have this note, and if the interest rates go down on when the interest rates goes up when the inflation is up, and when the economy is very hot, I mean, putting more jobs, people are getting paid more, retail sales are high, everything is high, then this combined mix will occasionate into X. Okay. And that can be a positive Australian dollar or a positive Australian stocks, positive Australia index, whatever, ASX, right? ASX 200. And so on. So I highly recommend you to do this. Okay, this is something that will save you time, because sometimes you're like, oh, what's happening here? What's this move? So you can just come to your book, read it, what's there, and go from there. I actually was doing this on the Word documents as well, but then I stopped. Not Word documents. I was doing on Google Docs because it's online. So sometimes I'm traveling. I have my computer on me. I know what's going on. One thing that you can't trust is your brain to remember everything. So I don't have it here, but so this HD, right? So imagine that this is a HD, an external HD. So hard driver. Okay, it's an external hard driver. So all my photos, everything are here. So I can't rely on my brain to remember the photo that I've took 10 years ago when I was a baby. Okay, so but I want to know that photo. I want to see that photo again. So this is why we've put in a hard driver, and I can go anywhere in the world and I will have that photo with me. Of course, if I lose the hard driver, I lose everything. But this is one of the concepts that I always say. Learning fundamentals can be confused. Right? It can confuse yourself very quick because it's so many things throwing to you, like interest rates, swap rates, 2-year bonds, treasury bonds, inflation, labor market, everything in one place. So take note of everything and come back in 2 to 3 months and tell me if that has helped you or not. All right. Okay, coming back to the economic calendar. So today we're going to have midnight. We're going to have, okay, so just remembering, this is Australia time, okay, guys, as always. So we're going to have the Fed Chair Paul giving us a speech. It's going to be very important. Next, we're going to have in the morning, 11:30, a China PPI and the inflation rate year over year and the month over month as well. Expected to have a little bit of a increase. Then we're going to have the RBNZ interest rates decision at lunchtime tomorrow. Expected to be no changes at 5.5% from the previous 5.5%. And that would be it for the day. All right. Well, we're going to have UK Bank of England Phil, I don't know how to pronounce his name. He's going to give us a speech as well. So if you trade pound, if you trade euro pound, pound dollar, pound yen, pound CAD, it's pound New Zealand, it's definitely a good watching. And then on Thursday, we're going to have, again, we're going to have the Fed chair, Jerome Powell, giving us a speech. And then after that, on the same day, we're going to have UK GDP and German inflation rate. Remember what I always say, German takes a big part of Europe. So it's definitely a good option for you to watch out for this. And going forward on Thursday, 10:30, we're going to have a very, very interesting data release that will be the US CPI. And that's another thing that I want to note down here. Second is US CPI. Okay. And then, okay, so we're going to have the month over month and the year over year, usual. And then Friday, we don't have anything except for the China balance of trade and the United States PPI that I want to note it down, but I don't want to note down as a third topic. I just want to note it down as below the US CPI. It's going to be PPI month over month. Sorry. It's really hard to draw on here. I don't know why. Okay, done. So these are the 3 topics we will be covering today. So first is Jerome Powell. Second is the US CPI, and just underneath the PPI, US PPI, of course. And then we're going to have consumer sentiment as well, preliminary for July on Saturday. That will probably be most of you guys Friday. But that would be it for this week. Okay. Anyone have any questions regarding economic calendar? Anyone have any questions regarding any data release this week, or we can move forward? Questions? The US dollar. Yes, go ahead, Switz. I'm all ears, mate. All right, so send your question on the chat, and I will definitely be looking to answer these once I get it. Oh, there you go. NFP and average earning and unemployment rate. That's a really good question, actually. Mixed figures. Yes, it is mixed figures. We did had a higher NFP. We had a lower unemployment. Higher unemployment, meaning no good, and a lower average earning as well. So these are not on the topics today. How should we approach that on the chart? Okay, so that's not on the topic today. But what I will do is I will definitely note it down and leave it on my side here. And then on the last 5 minutes, I get back to this, just so we don't stop the flow of the webinar. And then we're going to get it there. All right. But if you have any questions regarding what I've just said now, more than welcome. Thanks for understanding, mate. All right. Okay, so it's all done here. Let's go to the chart now. Okay, so first thing, Jerome Paul. I believe that, you know, if we look at the market haven't been moving much. Or haven't been much moving because there are some things happening. Of course, we have UK election. We just had, right, not having anymore, but still I like to say having, because it's still a lot of effect. You know, it affects the market pretty heavily. France elections as well, US elections as well, and especially the Biden and Trump um, debate that they had. And in some way, this is shaping the market to be a fear, to feel fear. All right. When I say this is, if we look to euro dollar, pound dollar, USD JPY, any currency pair, they're not moving much. All right. So I can show it to you here. So USD JPY this week, since beginning of this week, that's a daily chart. So let me put in a 1 hour chart. Okay. So this week we started on the 8th. So 6, 7, 8. Okay, so here we didn't move much. So from here to here, it's pretty much nothing. Pound dollar, okay, again, we haven't moved much. Euro dollar, we all know we haven't moved much as well. Euro Aussie, we haven't moved much. So most of the currency haven't moved anything. And this has been because of Europe, UK, and US elections. Okay. As I say, France elections are somewhat over because there's a lot of things that has to be done. But just an overall look of what happened on Francie. So last Sunday, when I've messaged everyone on the Telegram, I say, look, guys, the euro dollar has opened up with a 0.2% gap. It gapped up. It's because of the France elections that we had the voting pool, and the right side of the politics have had more votes than the left side. And in terms of economics, yes, the left side is not that well for economics and for economy, sorry, and for the right side is much better than the left side for the economy. Right side is better because they invest into the economy and they don't take much from the people. As of the left side, they don't invest much on the economy and they take much more from the people. All right. So if we look to the history of politics and geopolitics and politics and economics, tell me a country that have done well on a socialist measures. It hasn't worked any of those. So even the central banks, they can't have on a socialism aspect a fluctuation, if I could say, of the currency, because it's a pegged currency. That means is a fixed currency, and Scandinavian countries. I'm not too sure about those. Oh, and okay, so yes, it can work, but inflation can go high. The currency has to be not pegged. All right, so there's a few trickies, but maybe it's I can be wrong. I assume that maybe they are good ones, but anyways. So as I was saying, it's very hard to find those countries. Anyways, yeah, I don't know. I would have to check that, Stuart. But thanks, man. I'm going to have a look on that soon. But anyway, so, the market pretty much on France, what happened was, and then on now this Sunday, right? So it's very fun. So let's say 33.33% got on the left, 32.33% got on the right, and 33.33% got on the middle. what is going on? And that was decisive, right? So this is on the power now. So the market was expecting something. It didn't happen anything of what the market was expecting. So if we look to these, it's so funny, right? Because everyone is expecting to the left side to lose and the right power to and the right side to get in power. But that wasn't what just happened. And if we look to the market now, imagine if you're a huge investor and you're looking like $100 million. You looked at this and you think, I don't know where to put my money. What would I do? You guys answer me. I'm going to give you 30 seconds. And I want to see if you know. If I don't put my money on US dollars, euro, pound, yen, because yen, it's pretty done. Where would I put my money? I give you 30 seconds, going from now. 1, 2, 3. Yeah, that's a good question, Sweets. There you go. Right answer. Gold. Right. So look at what's happening with gold. It's going up. Right? So since here, when everything happened, the price of gold has gone up. And to be quite fair with you, I do believe that we're going to continue to have a higher gold price. Okay, maybe we can come back to 23.27. That is on here. Okay, you know how my technical analysis work. Now it's 100. Yes, now 100 is a good one actually. So maybe we can come to this area. Okay, 23.28. Because that was the first target right here. And then now we're looking to go to 23.28. So it's very hard to look at it. But yeah, look, gold is definitely the right answer. When you have all of those scenarios happening, when you have, everything just worked to be at the same time this year. Usually it's not, but everything just worked to be at the same time this year. And no one was expecting that, I think. And therefore, this is why we had so much of a volatile market. Okay, lots of gapping, lots of crazy things happening. Okay, so yes, the right answer is gold. Congratulations for those who got right. And Sits, you are right as well. CHF is one of the options, but let's have a look at US. Let's have a look on CHF CAD, for instance. CHF. Okay. Oh, sorry, CAD CHF. There we go. So CHF is not that strong on this moment. Okay, so the elections started here. Yes, CHF got stronger, but then the reason why Swiss didn't get that well, it's because it's on Europe as well. Okay, and then the market, okay, and then that happened. Okay, so we can have a look on USD CHF as well. And we can see that from here, all right, June, there we go. Yeah, that was exactly this one. Okay, so from Friday, June, Saturday, Monday here, CHF started to get weak and US dollar was better than CHF at this moment. So what investors are preferring at this moment is gold. Okay, why I'm talking about this? Okay, now I'm going to ask you another question. Who's the guy that can come with one speech and move the currency? Who is this? Everyone knows. It's so funny. Yes, is our friend JP, is Jerome Powell. So he's a little brother and he's gonna giving us a speech tonight. First things first, okay? Don't expect for him to open his mouth and the market suddenly, no, it's not about that. The heavyweight championship. Yes, that's correct. That's a funny one. Yeah, so Jerome Powell will be in he's pretty much the king, okay? Where is this? All right, I have to do this, guy. I have to do this. Um, okay. Okay, I'm not a good drawer, but this is a crown. Okay, this is a crown. Yeah, that's JP Morgan. Sorry, that's Jerome Powell, and he is the guy that moves the market. Okay, because okay, let me do like a little chain here. Fed. Okay, that's the fat boy. All right, and he's the guy that pretty much will move the market from bottom to skies to bottom in one single word. And this is how I've tried to transition now into him, because what the market is expecting. The market wants to know, is the Fed cutting this year or is the Fed not cutting this year, and how this will work. Okay, so if we have a look at the CME, right? So the Fed Watch 2, a very well-known tool. It's pretty much servers that they do. With all of the banks, analysts, and everyone into finance, of course, big people. And they go and ask, like, what are you expecting from the Fed on the next meeting? The next meeting it's on this month, on the 31st of July. The next one is on the 18th of September, and so on. And then they ask it, and then they give an answer. They do the maths, and here they have the tool. So for this month, they're not expecting any changes. So maintaining the interest rates at it has how it is. In 18th of September, they are expecting 73% of the market is expecting 25 base point cut. So who cuts the rates is the central bank, and who is the chair on central bank is Jerome Powell. So tonight, when we have the speech, and tomorrow as well, okay, not tonight, not only tonight, but tomorrow night as well, that will be Thursday morning, midnight. It's going to be very important for us to watch what he says. Maybe tonight won't move anything, but it will give us hints on what the economic projections are and what is what is his instance. Is he more neutral? Is he more dovish? Is he more hawkish? Lauren says that I think he will still be neutral like he was on the 3rd of July. In my opinion, he's looking at the US dollar at this moment and losing power. I think he will be hawkish. I think he will look at the media and, look at these topics and think, okay, I need to do something. I need to react. I need to react in some way, in some certain way. And the way I can do is I can do forward guidance. I can just be hawkish. Or I can just testify that inflation is not as expected, coming down, not expected. So the bits and pieces that I'm waiting for him to talk, but I will be definitely taking notes and letting you guys know tomorrow's morning when I come to the office. So that's the first point. Okay. Now, the second point is, if we go, let me just get off from this. Okay, perfect. So if we go to the FOMC, oh, that's not what I want. Maybe here. Okay, monetary policy, transcription, monetary policy report, 2024 March 18. Sorry guys, let me just do it again. Let's see. There we go. Okay, so the last one was the 18 statement. Okay. So they say that recent indicators suggest that economic activity has continued to expand at a solid pace. Job gains have remained strong. This is last month, okay? Job gains have remained strong and unemployment rate has remained low. Well, now this is not true anymore. Let's see how they're going to do this 31st of July. Inflation has eased over the past year, but remains elevated. In recent months, there has been modest further progress towards the Committee's 2% inflation objective. Sorry. The Committee seeks to achieve maximum employment and inflation at the rate of 2% over the longer run. The Committee judged the risks to achieving its employment and inflation goals have moved towards better balance over the past year. The economic outlook is uncertain and the Committee remains highly defensive to inflation risks. In support of its goals, the Committee decided to maintain the target range for the federal funds rate at 5 to 5.5%. In considering any adjustments to the target range for the federal funds, the Committee will carefully assess incoming data. So let's see what they're looking at. They're going to be looking at is getting greater confidence that inflation is moving sustainably towards 2%. In addition, the Committee will continue reducing off its holdings of Treasury securities and debt. So the Committee does not expect it will be appropriate to reduce the target range until it has gained greater confidence that inflation is moving. Okay, so that's pretty much what they're looking to move the rates. Okay, so they're looking for have greater confidence towards the inflation getting driven to the 2% target. That's good. That's acceptable. In assessing the appropriate stance of monetary policy, we'll continue to monitor the implications of income information for the economic outlook. For the economic outlook, they will be looking at wide range, including the labor market conditions, inflation pressures and inflation expectations, and financial and international developments. Okay, so that's pretty much the two key points that they're looking at: inflation coming towards 2% and the labor market conditions. Okay, so we all know what they try to seek. They try to seek the job gains. They want to have a balance between the labor market and the inflation coming to the 2% with the rates. So they just want to have this whole thing working on the same pace and not completely different areas and one going too much up and one going too much down. Now, that's the first point. Okay, so yes, Jerome Powell will be very decisive and very important for this week. Everyone agrees? Everyone good with that? Can we move ahead? Yes. Okay. Now, second point is the inflation, the CPI. Okay. CPI we're going to have two CPIs. And I was just discussing with my colleague friend here, Peter Pan, CFA analyst at ACY here. And we were discussing, look, what are you expecting for the CPI? Because I have no clue. And he was like, yeah, look, maybe we can have a higher CPI, but I don't care for the CPI. I care for the core CPI. I was like, what do you mean you care for the core CPI and you care for the CPI? He was like, yeah, the central bank doesn't care for the CPI. Central bank cares for the core CPI. And I was like, so my whole life was a lie because, I've read into books and everything that the central bank cares for the CPI, not only for the core CPI. And he was like, no, the central bank cares for the core CPI. So I want to ask you guys, I think I know this is a little bit of a technical question, but I want to test your knowledge and I want you to have this feeling of getting tested as well. So why do you think that the central bank cares more for the core CPI and not only for the CPI? And I'm not expecting a precise answer because this can be broad, but I just want to know from you, what do you guys think? Yeah, my whole life is a lie. I was like, what? Not sure. Okay, not a problem. Central bank care for the core CPI because it measures the changes in the price of goods and services, excluding food and energy. Same here, not sure. Lawrence, did you wrote these or did you search on YouTube on Google? Cheeky boy, ChatGPT right there. No, I'm just joking. Yeah, so that's correct. Oh, you know already then. So, okay. Yeah, so that's correct. So the central bank cares much more for the core CPI because the CPI, um, measures the whole change um, on the inflation, including services and goods, energy, and so on. And um, the core CPI doesn't include this. So the price of goods and services, excluding food and energy. Okay. So that's why the central bank cares much more because they can't control food and energy prices, right? And this is why they care much more for the core CPI. So core CPI can come higher, and if it comes higher for the US dollar, this will give a strength to US dollar, okay, and it will weakness the euro. Now, the PPI, the producer price index, is as well the other important part. Is okay if the CPI is coming higher, or if it comes lower, even worse, if it comes lower for the end consumer, then then we need to check how the PPI is coming, the producer price index. Okay, so that's the whole thing. So if we have higher PPI and we have higher core CPI, then yes, this would be very very mixed for the US dollar. But if we have only one direct high or one direct down, this will decide somewhat how the US dollar will move from there. Okay. So that's these are my topics for today. So we still have 10 minutes. So okay. Just covering all again. Things that will move the market this week again. Yes, France, US, UK elections is to have, a pretty big turn point. GM species, right? Not only one, twice this week. US core and CPI, core CPI and normal CPI, month over month and year over year. And last but not least, the PPI, all right, producer price index. Now, I've separated the question here from Switz that he asked us in the beginning. And he asks if the NFP and average earning and unemployment rate have mixed figures, how should we approach that on the chart? Okay, so that's exactly okay. So I've waited to answer your question on the end because of the whole thing I want to say, and the market is not caring too much about this, and the market is this is what I mean by context. Okay, this is what I mean by drawing a context around the fundamentals, not only putting the numbers, the data somewhere. And you need to draw a context. You need to understand in depth what is happening. So market is not caring too much about this at this moment because we did had a somewhat mixed figures. Market went up and down and finished it. So one thing that you can take out of this is if average hourly earnings are coming down, people want to have more money to spend. And there's a lot of people getting out of jobs as well. Not new jobs have been created too much. Yeah, we did have 200 and something thousand high, but still lots of things to be done on the US economy. Hope I answered. Okay. So that's pretty much all for me today, guys. I hope everyone have a beautiful week ahead. I don't want to extend myself, but that's all. Any questions? Not a problem. Okay, yeah. USD CHF. Again, I wouldn't prefer to go to those pairs. USD CHF. I would prefer to go for euro dollar just at this moment, because I see a higher potential return on euro dollar than USD CHF. But if you really want to trade USD CHF, which one are the best at this moment? Okay, is CHF the strongest or is the US dollar the strongest? Because when we look to it, we have US dollar very weak and CHF as well very weak because it's getting affected through the US dollar, but from USA. But still, I do believe between those two, US dollar is still the stronger for this week. All right. All right, guys. Thank you so much. Have a great week ahead, and catch with you on Thursday. Yeah, green pips, everyone. See you guys. Bye-bye.